Nickelodeon.
Hey everybody, what's up? I want you guys to do some dirty things to the like button or dislike button. Make it happen. Matthew Gorman, Kenny, not Ken, not Kenny. Thank you guys so much for becoming Long Johnsons. I appreciate it.
Long Johnson. Long Johnson.
Happy Sunday. Shills were inside of us all along. All right, so let's see. What did I want to cover? How about what happened Friday? And what's going to happen this week? All right. Is this working again? I tried. See, the problem with the 2K stream is that I can stream it, but most people can't watch it on their shitty cell phones. FF, yeah, it's working now, I know. Stream is laggy as fuck. Out the pores. I don't think it's the pores' fault, JC. To be fair. Yeah, I know it's better. All right, so what did we have Friday? Friday we had quad witching, which meant options for GameStop, options and futures expiration. We had the beginning of the S&P index rebalance. So all S&P ETFs 4, 6, 500. And this week coming up, we're on 321. We're gonna have XRT's ex-dividend date. Given that XRT is sold about 1,000% short, this should be fairly significant. So these have T+2. This is T+3. This is, well, just tomorrow. So that means that we could potentially see price action out through Thursday of this week. There's also other like IJR has a dividend this week. IJH, I believe, has a dividend this week. So we're going to see dividends coming from all over. As far as Friday is concerned, mostly I think we saw them hit the low that they were willing to push the stock down to, with Vega neutral being at $73. And I think we saw a little bit of possibly institutional interest come in. Mega lag. My upload speed is like 1 megabit. Oh, I know why. Better now? Yeah, okay. Torrenting Blu-rays again. No, it was the FPS. I bumped FPS to 60. I'm back. The whole presentation of what happened on Friday was unwatchable. You should do it again. I feel like if you rewind it, it should just be watchable. Seems good now. Okay, cool. Sorry about that. Start over. All right, fine. It's not. How could? Well, all right, whatever. Do it again. All right, so it's what options? So Friday. What options and futures expiration quarterly options. And futures expiration. Those are T+2. We have ETF rebalancing for the S&P index. Due in T+3. We have X dividend dates for yeah. XRT, I believe IJH, IJR, AWM. Between 321, 325. And then, so we can see gamma exposure here. We can see obligations covered here. And we can see obligations covered due to these X dividend dates. You know, XRTs like got 1,000% short interest. IJH, IJR, IWM, all like 20 to 40% short interest. Can they fail to rebalance? No. What's interesting about this is that actually, even if the shorts couldn't cover here, the ETF needs to take the hit in order to cover their asset pool for the rebalance. So even if shorts weren't covering, the ETF needs to cover its negative balance in order to rebalance. I mean, we had quad witching, and I don't know, somebody brought up something like MOASS tomorrow. Well, the interesting thing about Friday, is that they tried to slam the price down to 73 or near 73, but they don't want to go below that, because if they go below that, they have to like rebalance their volatility swaps, right? But if they push it below Vega neutral. And so this is kind of like the bottom line. Like they don't really want to go below this. So they pushed it as close as they were willing to go. And then, I mean, we had some FTD covering throughout the day. We had fairly high volume, indicating that some long institutions probably were fairly interested in the things GameStop announced, with that quarter two NFT proposal, a launch by end of quarter or before the end of quarter two, and the price where it currently is, it's going to spark some interest, more speculative investment probably, as bigger institutions may wait to get in until that valuation is priced in or starting to be priced in. But I mean, the opportunity to buy into GameStop now is good. Like this is a very low price. There's at least some guidance, right? Like they did announce that they are going to release the marketplace. So even though they didn't project any forward guidance, that does give, you know, a reason for institutions to buy in. Can they fail the rebalance? No. As a true, honest GME investor, AMC is the true MOASS play in my book. Thank you, Citadel Securities. I appreciate it. No Discord announcement? Oh, I thought everyone just knew. I didn't realize I had to hear. I'm not good at like social mediaing, all right? Are holidays calculated in for what? Blue Fire. I'm wondering if starting to cover that last week was why Nasdaq 100 was up so hard. Wondering what happens to it this week. Still way oversold, but kind of chasing now. Possibly. Is it smart to get more XRT with that kind of SI, or does it not work like normal stock shares? I mean, so XRT is not going to squeeze, right? It can run as they cover obligations, but remember that it has infinite liquidity. Is it smart to get? Is anyone else? Anyone else with the peak at 96, down 25% on safe April's already Friday? Peak at 96 and down 25% on safe April's already Friday. I don't know what that question means. Is there another half of it? You're down 25% on April options and you think the peak is 96. Is that what you're saying? What's the so the different OPEX obligations theory, which I'm still not entirely sure about, but it's something that we've discussed at least, is that what the price action that we saw into the end of the year. Here, let me open up a new window. GME. Oh, that's just the same shit. So the price action into the end of the year on GME was generated. These OPEX states were generated from IWM, is what we were thinking. Here, all the way out to here. But then August and November were also IWM, but we started to see this other anomaly like November 3rd popping up, and we think this might be the new ETFs being closed out. So after GameStop moved to the Russell 1000 right around that point, and so obligations to IWM going down over the year, and then from October on, obligations to XRT and Russell 1000 ETFs going up, right? So as IWM is closed out, these new obligations being built up in XRT, which got reg showed right here, may be due on a different quarterly cycle. So IWM, you know, they closed out obligations in like Feb, May, August, and September. But XRT may be on a different schedule. It may be March, June, September, and December. And so it may be that with the IWM obligations trailing off, they had this opportunity in between the switch to start shorting it, because this is where we see XRT obligations really pick up, is here in October. Like October 29th on, XRT obligations for GameStop go through the roof. And yeah, with it getting reg showed finally here in December, where it's remained ever since. Sorry, one sec. Let me get to that Ko-Fi that I missed. And so it's possible. We don't know yet. I mean, obviously we'd find out this Tuesday, right? If that's the case. If someone wanted to play this week but not resort to weeklies, what dates should they look at? Would a week or two in the money be enough to offset the final month theta decay? I mean, even out of the money, if you're just gonna hold them for 1 week, if you buy like, I mean, if you buy like less than 45 days out, you're gonna lose some money to theta, but not a lot. What you're really worried about is losing money to delta. So if you buy options with intrinsic value and they drop, you're gonna lose, like the price drops again, you're gonna lose that intrinsic value, which is gonna hurt, especially when you're paying up front for it. So yeah, it's a tough choice. I mean, I have Junes right now. April 14ths probably aren't terrible, but they are getting closer. If you're just carrying them through this week and it's just speculation, it's just out of the money and you're carrying them for 1 week, I'd imagine that the cost wouldn't be that high on carrying, you know, like out of the money calls from the like 321 through 325. But you might lose like 20-30%. Then it also depends on, you know, what happens with our price action. If we go back down again, we get hurt even more. That's why I bought so far out, was because I'm just like, after this week, if nothing happens, I'm just moving those to leaps. So I wanted to maintain as much value in my contracts as feasibly possible. Is there going to be a chance to get it? So I think BBBY is nothing's really going to happen on BBBY immediately. I think BBBY, so with futures expiration on the 18th, in T+2, when those contracts are due and they hit a illiquid market, this can generate a large flood of FTDs, like we saw in GameStop last year, when Cohen bought in. And then December, when the futures expired, I think it was the 17th, but it might have been the 18th. When futures expired, there was no shares available, and this created a huge number of FTDs, right? T+2, after the December 2020 futures expiration, GameStop was added to the reg show threshold list. So for BBBY, we're kind of looking at the 18th. This is the nearest futures expiration date since Cohen's buy-in. And then we're looking T+2, and then we're going to be looking for reg show inclusion. If BBBY is added to the reg show threshold list this coming week, whether it be Tuesday or Wednesday, that's very indicative that a lot of the same things that happened with GameStop last year are going to happen with BBBY this year. How's your level of excitement going into this week as compared to other hype weeks this year? I'm pretty excited, and also like a little trepidatious, right? Like I'm excited because I see the potential for this, but with them skirting their obligations for so long, I worry that maybe they have a way to continue skirting them that we have not considered. If those OPEX obligations were in fact packed into ETFs and rolled forward, they would still need to be cleared in some way this week. But it's possible that with XRT on reg show that things are being, you know, deferred, and it's diffusing that push of FTDs from the ETFs, which leaves us with GME FTDs, which are still fairly insignificant. Is there going to be a chance to get in BBBY? There should be, yeah, so BBBY should be, by the way, should be still fairly easy to get into this week. We may start to see the price increase, but slowly, as we've been seeing. It's been mostly locked at 20 since he bought in. Tempting to YOLO into BBY. How far can they short it? Could they drop it below 16 again? Maybe, but you know, that's what, you know, cash secured puts and covered calls are for. You can lower your cost basis, and it's only a few dollars. I mean, in the 2 weeks since I bought in, I've gotten my cost basis from like 24 down to, you know, like almost 21. So it's really not that hard. Unfortunately, I haven't been assigned on CSPs, which sucks because I actually wanted to buy more. Thoughts on Nvidia? Crazy run last week, and they have their GTC conference this week. Could be more ups or just hopium. I'll take a look at it in a minute. Orange tornado, but not right now. Because I want to get the GameStop stuff out of the way, and then I'll look at other stocks. Are you streaming earnings? I already did. Is it possible to see obligations deferred again using ETFs? See, I don't see how, because the ETFs have to rebalance. So how do you defer the obligations yet again when the ETF needs to cover everything? So weeklies this week? I don't know. Maybe. If our climb is volatile, yeah. But I'm not going to buy any. I mean, I think BBBY is undervalued, so I think buying shares isn't a bad investment. Leaps are fine too, especially if you intend to exercise them later. That could just be also considered, like just buying into a ton of leaps can just be considered shareholding as well, right? No, XRT does not contain BBBY, but IJH does, and IJR and IWM. This point, pump up to something like 200 might be their best bet, hoping they tried beaten down apes will sell to break even. Well, not just selling, but also don't forget that that entropy swap is still in place. So someone's, you know, still long gamma, and it's just sitting there and the price isn't doing shit. So whoever is holding this fucking swap position is just losing out on these low prices. Like they're expecting the price to go up, but volatility is, you know, dropping. and so is the price, which is, you know, why would they even have the gamma hedge or the entropy hedge at that point? So someone else's, like an institution, is getting burned here as well. Definitely not retail setting up a entropy swap. What's your favorite options monitoring shopping websites? I don't use those. They suck. It's just a good way to get into a nice rug pull from institutions. Are you going to sell GME CSP this week? They can't really push it below 73. Seems like 75 is pretty safe. I mean, I sold 75s last week, and it got a little dicey towards Friday, but I just made it out with profits. Yeah, CSPs are probably decent. Obviously Vega neutral needs to be updated after Friday's price action, so I'll have to ask Yelia if she's got the new Vega neutral. But I'll see if I can get that for the daily DD tomorrow. Can obligations be kicked again using puts? No, because the ETF needs to rebalance. So this has nothing to do with the short hedge funds trying to balance their position. The ETF needs to rebalance its asset pool. They have a quarterly audit. They can't be carrying 1 million synthetic shares of GameStop through that audit. They need to have the real shares there. The leaps get bent over if the market tanks. Probably. Thoughts on Reddit Wyckoff write-up you did, and is it invalidated or is the potential still there? Wyckoff, so the thing about accumulation and Wyckoff is that it can continue to drag on. So if, you know, we thought this was the spring in the test, right? And it wasn't, you know, we can find new lows and spring from there. So it's that transition from phase C to phase D that is like hardest to predict. Because accumulation can just continue, right? Like it can, you know, and you spring and test and then fail and then accumulate more and then spring and test and fail and accumulate more. And then eventually, you know, it starts to go up. For BBY leaps, is it better to hold in the money or is like 30, 40 decent for Jan 2023? I think the company's super undervalued. So I think a fair market price would be about 60. So I've been buying most of my leaps. I had 20s. Those are kind of, I'm priced out of those now. I don't want to buy more of those, but I've been buying 30, 30C, 40, not 300. That just looks like 3. 60. I have some 80s. I'll probably buy more. But I'm waiting to see if BBBY gets reg showed first before I buy more of these or these. If it does, I'm gonna buy the shit out of these. But yeah, right now 30 and 40 are my primary targets. I only have 20 of these. Because I bought those back in like early January. But these I'm still building up. These I have very little of. What's your opinion on covered call ETFs? They're decent if we're in a bear market or the market's stagnant. They're not bad. They should do well. You could just sell covered calls yourself. You'd make more profit and you wouldn't pay fees. Can ETFs rebalance with futures forwards? With forwards, yeah. That's how they do generally rebalance. That's how they maintain their NAV. So say XRT is 1 million plus, it's 1 million plus shares short GME, right? If they have a forward contracts for 1 million shares of GME, which would have expired on Friday, then they can say that their NAV is even, right? Because these two cancel each other out. But the problem is when they rebalance, they need to show that, right? And so they have to have these delivered upon. And so we were thinking the reason why IWM may have had continued exposure on GameStop is that we saw those forwards being closed out not only on the quarterly, but on the semi-annual contracts. And that may be why that may it's two ends there and whatever. That may be why we saw August and then November play out the way they did. So like August still had a lot of obligations, but then November much less, right? And now we think they may be, ever since October, may have been building up these forward contracts in other ETFs instead of the Russell 2000 ETFs. They were building them up in the Russell 1000 ETFs. And so once those forward contracts start coming in and getting delivered upon, then we'll start to see that price action again. And that's kind of what we were looking at for that possible shift in quarterly expiration, is that the forward contracts are no longer due on F-Man, but they were due on like MJSD. Sorry, one sec. I'll get to the Ko-Fi here. So BBY gets reg showed. What will you be looking at in addition to leaps, or just hold leaps and wait? Because knowing when it would move is uncertain. If it gets reg showed, it'll move in 13 days. If anything, then I would be buying closer contracts as well. I'd also be buying like a lot more of them, quadrupling my position probably. You're going to buy BBY shares or options. Hey, whatever you feel most comfortable with. Is it an investment that you're interested in? I like it, but I can't recommend it to you. Do you see cover calls and protective put ETFs as a good long-term investment? They can be. Cover calls ETFs generally don't do too well in a bull market. But if the market's tanking, then yeah, they're pretty decent. Cash secure put ETFs do well in a bull market. So it's kind of the inverse. Cover calls are going to do well in a bear market or a stagnant market, which is sort of what we're in right now. Although the recovery the other day could indicate a return back to new highs, especially if confidence continues to kind of increase as fear leaves the market. Anything significant come from JWN's announcement to reinstate a quarterly dividend? I mean, it could drive price action. I don't know how big the short position is over at JWN. Does SPY have to break 450 for a confirmed reversal? Or is this a little up before another leg down? Well, so if go out here, I think I have it drawn in WeBull. If we go out here, we're actually breaking up through the downtrend that we've been on. And so Friday's breakout was pretty significant. If it continues to push up past 442, which it's already done, and it can break 450, then I would say that this reversal is confirmed, that we are back into a at least a stagnant market, but maybe a bull market again. You know, with the Fed finalizing its rate hike announcement, and you know that kind of out of the way, and now that the Ukraine stuff is mostly priced in, there's a lot less fear, right? There's a lot less uncertainty, and with that could come, you know, another surge in the market. Not easy to kill the market, right? It takes something. Do you think this may have been the ultimate goal of the gamma ramps blocking futures rolls? Push the shorts position into ETFs and force buy-ins. Maybe. You mean back in August when that big gamma ramp failed? That's possible. It's possible that all the failures were in order to continue to compound their obligations. You see a loop ring IMEX run to 30-50% last night and then fall. Yeah, I saw it. We're expecting a run this week. What's your price estimate? I mean, Gamma Max is at 144, so I wouldn't imagine that we'd cross that very much. If we start to move up past like 160, 170, that would indicate that, you know, we're in for something very interesting, because it takes quite a lot of buy pressure to continue to push the price up beyond that. And then we're looking at like a potential, like far more potential for a squeeze in that scenario. How did you time your 130 BBY buy-in, and why did you go in? I didn't buy BBBY on 131. I bought BBBY before leaps in January. I believe it was on the for the leaps. So I bought it before January's leaps expiration, and I believe I bought them on the 18th, if I'm not mistaken. And I just bought them $20 strike. I was just expecting the share buyback to improve the price because it was in the same basket of stocks as the rest of all of these. So the share buyback and the the fact that it's part of this consumer discretionary basket seems sufficient for me for it to see some price improvement. With Ryan Cohen buying in, obviously, like that ties up a lot more ownership and the company looks a lot better. And so that's why I bought more. But previous to this, it was just kind of like a side play, like DDS. I don't know if RC values BBBY at 80, but I think he thinks that his buy-in may trigger a squeeze. I don't know if we've broken the downtrend yet. We've got SLD coming up. You know, this may just be pushing out a little bit, but it does look good. I mean, if it continues to push up, then I would say, yeah, we're starting to confirm a breakout, which means a lot of things, everything's going to move up, right? As speculative value starts to return. What do you think actual chance of BBBY reg show? FTDs are pretty high, so I think it's definitely possible. BBY has a bigger float, so it requires more FTDs per day. But also, the interesting thing is it's harder to manage those FTDs on a NASDAQ stock because there's no DMM, right? It's an automated exchange, which leads to a lot of naked shorting on NASDAQ. Like NASDAQ short stocks tend to be the most naked short, but without a DMM, they can't internalize the order flow, which means that it's harder for them to clear out FTDs through CNS. Because remember, like whenever they don't clear through CNS, they internalize. So it's like CNS and then internalize, then push it back through CNS. Because that's cheaper than letting it go to the OW. OW is expensive. I could explain November 3rd. What I think November 3rd was a release of pressure due to BBBY's announcement of their buyback. So I think they had a bunch of FTDs that they were building up in this new basket of ETFs, and they just cleared them real fast because they didn't know how much BBBY was going to buy back immediately, and it would have put them in a situation where they could have been squeezed, right? So I think they just the next morning they just and that after hour session they just bought aggressively in order to clear their FTDs. What was the fear gauge last week? Friday? I think it was at like 14. What's it at now? Yeah, it's at like 37. So significant improvement. Schiller PEs climbed back up. As they build up new forwards, they have to be able to buy longer term forwards, no quarterlies, to make a longer transition period. Possibly, yeah. I mean, the most common forward contracts are quarterly, semi-annual, and yearly. So, you know, assume that they've used all of these. You can also create like forwards for 2, 3, 5, and 10 years, I believe, as well. That just looks like a 3. That's a 5. Hope you had a great weekend. Full bull. I think they're going to be violently surprised. I'm hoping so. I'm excited. Trepidatious, but excited. Does the threshold? Yeah, the threshold list. The information is released after market close. I forget what time, but it's a little bit after market close. So IWM's FTDs are in OW. Are they required to maintain forwards for that exposure, or just mega buying in June to both cover the rebalance and FTDs? I mean, they're required to maintain the forwards. They don't want to put the obligations of our house, because the more you have in there, the more money it costs to sustain it. And IWM doesn't just rebalance yearly. That's the index rebalance. That's different. So like this is the S&P index rebalance right now. The Russell 2000 index rebalance is in June, but it still has quarterly rebalances as well. Have your thoughts changed on VIX volatility squeeze and the market flash crash possibly this year? I mean, if this fails, right, this is just going to create more VIX shorting as price performance improves, you know, and as greed increases, if greed goes up, so will VIX short positions. So, you know, if they didn't get out, which they very likely didn't, in this last drop, then, you know, this is still just going to become more and more asymmetric. Need to check the main exchange. Ticker is listed on as an e.g. NASDAQ, won't be on the NYSE list. Yes, that's correct. What mean possible synthetic futures forwards and turns Friday daily? I don't know. I didn't read it. Have you looked into R2K inclusion window on May 7th much? Been discussing that in the 510 gang as necessary to move the price to at least 130 to keep GME FTDs in the OW from IWM. So to move it back to IWM, I mean, we're right at the market cap limit at like $100. I think it's 7.3, right? Is the limit for IWM 7.3 billion? it wouldn't matter anyway because it would cost so much buying if it were put back into IWM. Like that would be, even if they were trying to resolve their obligation, like if there were obligations in the obligations warehouse and they were trying to resolve them, moving back into IWM would create a ton of institutional buying, which would create waves of FTDs and just compound the problem. What are your thoughts on MMAT? I don't like it. I know he is. Aren't those SPY lines needing a bit of adjustment? Up a little on both at the right ends? I don't know. I think this is just like a... You mean like kind of like this? Son of a bitch. Ah, garbage. Hold on. I don't even know why they're drawn with that. This isn't my SPY TA chart, but it's still like we've still broken out, even if you know, adjust the bottom trend, which is more like here. It's still a breakout. You're still keeping an eye on sends since it popped on the scanner you're building. No, it ran, but that was the end of it. That's like, I'm sure it's still like a good long-term investment. Their product seems good, and their profits are going to go up. Is the biggest downside for wheeling the opportunity cost and the large amount of capital needed for it to be worthwhile based on its lower rate of returns? For the most part, yeah. You're tying up a lot of capital. If it's something you can afford to do, the returns aren't always so bad. Like it's decent returns. The issue is tying up capital for long periods of time, which, you know, generally if you're gonna, it's still not as long as like a buy and hold investment where your target window is like 3 to 5 years, right? You're tying up capital for 45 to 90 days. The biggest downside to wheeling is it carries much more risk than like a long hold position. But I already told you time traveling superpositional cat. Last week's fear index was at 15. It's at 37 now, which is positive. It means it's moving towards greed. That's on Workhorse moving up on the news of possible share release, which makes no sense. But some news about a new EV deal, garbage or not? I think it's just not very good. It could still be volatile. It has a large short position, but I'm not really interested in it. The company's fundamentals are kind of garbage. Could you see Citadel going long on another basket stock like they did with AMC? I mean, I guess if the risk is there, sure. AMC had so much FOMO. Why not flip the position on it, right? Like there was so much buying, and the price was cheap enough that retail, you know, was able to buy in very large quantities. And so flipping the position there makes sense, right? Like if you know if they're flipping it from their short to long, right? And you know they're short at 14, and a flipping to long is only going to drive the price to 70, right? But the interest in the stock is going to remain. Why not do it? It's not like GameStop, you know, where it's like at $100, and if they flip to long, it's going to, you know, shoot the stock up into the thousands. And then like they get to fade the peak on AMC, they get to sell covered calls in those price ranges at that. I mean, months and months of selling covered calls at elevated IV on AMC. The volume is perfect for it. The Vega is low because it's so liquid, and so it's just, you know, it's the perfect hedge. It splits interest. It does everything you want it to do. Macro, though, can you check my logic? As long as financial institutions continue to extend credit, accept collateral from other financial institutions will be able to extend their balance sheets continuously. Therefore, one FI refuses to accept collateral from another FI or becomes worried about impairment of already accepted collateral. Could this stop the balance sheet expansion? Equals stop IOU GME creation. Sure. To some extent, yeah. I mean, but how, right? Like, you need like a market crash, and then a massive tightening of margin constraints, which usually go hand in hand. But collateral already accepted. I mean, most likely they're using same as cash collateral. I don't think there'd be any worry there. When all is said and done, is there any chance at all to know exactly how they handled their position over the last year? Probably not. AMC flip clip your resume to Citadel. BlackRock benefits not good this year. I mean, Citadel flipped on AMC. It's in the data. It's in their 13F. I mean, there's no question that they're no longer short AMC. Yeah, no problem, Jedward. All right. So I guess is that all the questions for GameStop? So this week, potential, a lot of potential. Another exciting round of a bunch of shit being due and hoping they cover it. Is there anything we can do aside from buying options to continue to apply pressure? No, not really. Any thoughts on borrow rates increasing? The Fed rate went up, first of all, but they are borrowing more. Like I said, we're moving into this ETF rebalance, so the ETFs don't present a good choice for shorting. And so we've seen the borrow rate jump over the last few days because they need to use something else. That's all. Also, it's not up significantly, so they haven't really been using it that heavily, but they are using it. And they are carrying positions overnight, which is good. What's the mechanic around T plus 3 plus 6? That time frame lines up with Jan 6 and December expiries. What's the mechanic around T plus 3 plus 6? It's T plus 6, T plus 5 is actually the authorized participant FTD fail window. The T plus 3 is for the additional T plus 3 is for ACH transfers when they cash settle those fails with the ETF and the ETF buys back in. So it ends up just being T plus 9 generally, but it can also be T plus 8. That Friday night borrow rate, it was 4.1, right? It's 4.4 Friday morning. I mean, it's not. Is a rug pull a possibility this week? To where? I mean, there's really just not much downside. I mean, sure, yeah, they could rug pull it, but there's not a lot. There's not a lot of downside left. Where do we stand with the margin call theory playing into these rebalances? You can't predict when the margin call could occur. So the first date that settlement could have occurred would have been on the 17th, 14 days after OPEX. But it can continue out for another like 45 more days, depending on how many extensions that are granted if a margin call did occur. But so there's really no predicting what date it would occur on or when they would settle it. All we know is the window in which they have to cover it, which is like 60 to 75 days from February 24th. That's one of the reasons I'm starting to look at leaps, is because if that is the case, we can't nail down what date it'll occur on. Before this stream ends, maybe I'll do like another test stream to figure that out, Chicken Tender Daddy. Where the 178K volume candles from Friday from rebalancing? What? I mean, this is the daily. You're talking about like here? Has been reported Citadel 13F shows calls greater than puts. Have not checked. Can they be sold or bought or just long? They could be either one. 13Fs are almost useless. All they really give you is quantity. That's about it. They turned 100 into 1,000 this week. What are my chances to 10x this week again? I don't know. We'll see. If things keep going up, probably pretty good. It's easy to make money in a bull market. Does the large doji candle on the chart have any significance? It could imply a reversal. I mean, it does imply a reversal, right? I mean, we went up. We went down and then we went up. What's the first day they could be on Reg Show for BBBY? Tuesday. I mean, technically tomorrow, but Tuesday. I use margin. I mean, I use cash, but I also use margin. If I get assigned, I can like deposit more or sell off other shit. How do CSPs work? Well, CSPs are sold. Basically, you're selling a put at whatever strike. Say you're on GameStop right now and you're selling it at 85 for a premium of, I'll just make some shit up. Say they're like 2.35, right? If the price of GameStop drops below 85, right, you will be 100 shares of GameStop will be put to you at a cost of $85 a share. If the price closes above 85, then the cash and cure put will expire worthless, and you will just collect the premium. But to secure that contract, you need $8,500 in cash or margin. There's 60, 70 days calendar or business? So FINRA business days, the 15-day extensions, but also SEA 15C-3, I believe, is calendar days. It depends which extension they're getting and for how long. If they're being extended for illiquidity, it can be up to 60 business days. Business days, not trading days. So, thanks, Garrick. See you tomorrow. Paul, Sell, you were correct, and depending on security, yes. Can you sell CSPs without margin? Yeah, you can have just cash. Where are obligation warehouse charges detailed? I know they have a guidebook available. You have to look it up, or I'll have to get it from GAF. GAF has all the paperwork on it somewhere, like one of our threads. Have you had a chance to dig into car at all? Not really. When would a 13F come out dispelling 111% institutional ownership? I mean, institutional ownership probably isn't at 111%, but it could be. Or just implied naked shorting. End of this quarter? Usually when you see institutional ownership like over 100%, it's because the latest 13F data just isn't available. That's not always the case, but usually. Got an eye on the SPY this week. I mean, I'm watching it. It looks like it's rebounding. Yeah, so I haven't gotten to do a lot of digging on car, but it looks good. I feel sort of like it's chasing at this point, however. Like if you weren't in on it like early March, this is a bit chasey. But I mean, it keeps going up. I don't know if it's going to hit like 500 again, but it might. I mean, I think if anything, it'll probably get rejected here at 308, which would be forming a fairly nice cup and handle. But this seems to be the resistance. So I don't think there's a lot of, like, from a technical standpoint, I don't think there's a lot of room left for it to run. Do you think MULN? So I think MULN is a pump and dump designed by its own CEO. And it's kind of already hit resistance. It closed out Friday at 2290, but the number of options closed, I think, was too great for a gamma squeeze to really occur here. Unless a ton of exercising occurred on Friday, this probably won't squeeze, but there were enough contracts in the money that it's possible. So I'll probably maybe like pick up some weeklies on it and just see what happens, or whatever the next contract date available is at like $5 and see if it squeezes. The potential's there, but I doubt it will. Okay, Elena. Any price expectations for this week? If OPEX is this week. Well, Gamma Max is around 144, so I covered that already. I don't see us having a lot of price stability above like 150. At least its Gamma Max is still pretty high. I mean, that's a positive, even though our price is lower. Because when we were trading at like 120 to 130, like that range, our Gamma Max is still at 150. So the fact that Gamma Max is still at 150 now is a positive. There wasn't really a lasting reaction to the rate increase from the FOMC meeting. Will that happen later, or does the market just not care about it at this point? Well, first of all, like the 0.25 increase was priced in. Second of all, I think the certainty given by the Fed was far more valuable to the market than, than the negatives from the rate increase, because as long as investors know where to put their money to benefit from the rate increase, we can see growth, right? It's that stagnation and uncertainty when no one knows what the Fed is going to do that really hurts the market. Because if rates are going up, people can invest in companies that don't have a lot of debt or don't have variable interest rate debt. They can buy into value and buy into growth that's going to improve in an inflationary market, and so they know where to invest or where to put their money, and that means that investors are more confident, which means more bullish, and that leads to a bull market, right? So like inflation doesn't really affect that. It's the uncertainty of what the Fed's going to do. Like they didn't know if the Fed was going to come out at 0.25 or 1.0. I mean, Bullard was pushing the other way for a much higher rate increase, even though that, and then, you know, with oil prices and commodities settling a little bit, I think that's allowed a lot more bullish sentiment to come back in. Any thoughts about Corsair? Not really. I can check them out, but I don't really have like a opinion on them. I know at one point they were kind of running on a similar, like in June, they ran up around the time GME did. I think they also ran, yeah, they ran up into August as well. A little bit of, so similar short positions, maybe slightly part of the same basket, but I don't think the short positions are nearly as big, right? Like the stock hasn't been trading as long. And it wasn't, you know, it wasn't even trading back in like the March crash in 2020, when a lot of these short positions began to build up. So I'm sure it has like some potential, and it might be a little undervalued where it's trading now. Looks like it's coming back up nicely to maybe move back up into like the $24 range, but I just don't think it's the same amount of short positions. I think they were high back here and they're much lower now. What is it? It's APPH. Yeah, so everything's kind of just like right at resistance. This is breaking out a little bit. Um its next stop is, you know, just at 7. And then 850 after that. So be cautious of your resistances, especially that next one at $7. But yeah, it looks like it's just coming back up. But everything's doing this, right? Because the whole market was down. Everything's climbing back up with the market climbing back up. So it's just going to be almost every stock you look at is going to have essentially the same pattern. You think Apple will buy Sens? No, probably not. Curious if Corsair will be doing more with game development rather than hardware. I have no idea. Are they moving into game development? Are car mechanics just shorting and buybacks? It looks that way, but they announced $1 billion buyback, right? And so shorts are probably scrambling to get out. But the question is like, how much more are you going to chase it? It's almost at resistance, right? Like that resistance at 300. Like, are there enough short positions left after that initial squeeze to 500? Like, and then that second test of 300, and then now the third test. I mean, the fact that the cup and handle's kind of playing out backwards is pretty interesting, but I don't know how many shorts are left in it. And obviously, like, I can't rely on the data available to tell me what the true short interest is, because it's definitely naked shorted. And that requires like a dive into car at at these price points that I don't think is worth it, where I have to like start going and digging into their ETF flow and shit like that. And uh and it's like $14 from resistance. So like why either it breaks and it keeps squeezing or it doesn't. It's in a much more simple place. Are you looking at any more oil plays? Not really. I have some leaps on rig. That's about it. I think oil will start to pick back up in a little bit, but not right now. Once the so right now oil's going down because a lot of agreements are going out that are putting, you know, guarantees in place for production that doesn't exist. And then once it's realized that that production's really not satisfying demand, then the prices are just going to go back up. Thoughts on buying 2023, 24 puts on DWAC. Social networks are incredibly difficult to pull off. Leadership is tech inexperienced and incompetent. My only reservation is pumps by Trump. I don't think puts, long dated puts on it are a bad choice. I think it's a pump and dump. I don't think the company has much to stand on. So yeah, I would say that it's probably not going to be successful. If the downside of that is something you really want to play, because shorts can be wrong for a very, very long period of time before they're right. So it's got to be a position that you at least actively roll and manage. It's definitely overvalued, if nothing else. My son has a strange obsession, and it'll lose value when more shares are created because it's a SPAC. With Ford, looking at slightly out of the money leaps. Any suggestion on a good price and IV to buy in? I mean, IV on Ford is fucking just super low, so I wouldn't worry too much about IV. I don't know if it started to come back, but I highlighted this a few weeks ago. Yeah, this is still a very good entry for Ford, and I did find a bottom here at like 1550. Anything under 17, I think, is a good entry. If you're looking at leaps, maybe 18 isn't such a bad range. Make sure that you're willing to capture profit on those because this could take some time to play out, but the price right now is very good. If you were playing the Google split, would you think that September strike in the money or Jan out of the money would offer more profit potential? A combination of both? You could do both. Like you're just trying to play an increase in price pre-split. I don't know how much Google will go up pre-split. It'll go up, but I don't know how much. It's not going to be like Nvidia or something where, you know, that liquidity was super desirable. I do think it will climb into the split, but is the split officially approved? It might be, but they may be waiting on a vote. I have to look into that. Right now, I'm just selling CSPs on it because I think it's going to just continue to like trend up. It's still in a downward channel. However, it did get a bounce and on its uptrend. A super long time scale. Only needs 125 for AMD. AMD's still in its downtrend. Like it really needs to move. It needs to move up a little. I would say a little bit above. Maybe break 120 to really confirm a breakout. But if it confirms the breakout, that's awesome. Like, yeah, above 120 would probably confirm it. Right now I have, what do I have? I have 110, 115, and 145 leaps on AMD. I think this looks at least good for now. I think a break back up into 130 would be the next real resistance where I'd be afraid of a turnaround. But this could take some time. Even if it breaks out, I feel like it could break out to 120, fail, and then push up again before this trend is really reversed. Remember, AMD still carries a lot of short interest. Do you think what happened at the end of last week is the beginning of the snapback for the overall sector? It could be. I mean, in an inflationary economy, and you know, with the possibility of like recession or depression on the horizon, retail shouldn't actually do that badly. So I wouldn't be surprised if the sector turns around a bit, especially with the market not crashing, right? Like the shorts are now just stuck in the fucking position they were in yet again, and they've just doubled and tripled down on their shorts across consumer discretionary. And it's still alive. Like they didn't fucking kill it yet. So I don't know how they get out of this. Like their commitment to the short is significant. I mean, I'm sure they made some profits on the drop, but they're still locked up in that position. So if we go out to the SPY, you know, and you really look at how that played out, you know, as soon as consumer discretionary bounced above here, like here's where they shorted the shit out of it, and then as soon as it bounced up, it's never really come back down into the range of their short positions, you know? Like back when they thought COVID was going to kill anything that people did in public. And you know, the prices are still up here, so it's all still underwater. And they really need a crash to save themselves. And you know, they keep doubling down on the position, but it's never crashing. So I don't know how they get out. Like there's so much asymmetric risk there. The price seems like BBY would be a cheaper squeeze play and more upside. Yeah, I can't disagree with that. GameStop has more potential in price improvement than BBY does, though, because of its illiquidity. So if the equal pressure is applied to both, GameStop's gains per dollar invested will be greater. Takes on Visa, super low IV, nice run, probably hit 220. It tends to break 220. It's good at that. They've had a little bit of, it's very similar to Cat, but kind of a slower and less reliable mover. But generally a breakout of 210 will hit 220 before people start to paper hand. When it hits 220 though, watch out, because bag holders jump ship and it tends to tank the price pretty hard. Somebody asked me something else. I missed it. MOS? MOS. Interesting, kind of chasey, although this triple top looks maybe weak. Mosaic Company? What the fuck is this? What do these people do? Is this the um fertilizer company? I think this is still going to continue to be a problem. I just don't know how much it can go up from here. Kind of at a lot of resistance in this price range. So I'd be careful. It could either be a really, really good entry or a really bad one. Um, the next real range of resistance is about 73. It's a $10 move. It's not bad, especially given that, you know, the upside could be even greater. Is it going to return to its long-term trend? I think it's already kind of surpassed that. Because this is, this is like 08. So I'm curious as to the analysis in choosing DTEs on BBY and GME CSPs to build my position and CCs on GME to lower my cost basis. Is this merely personal preference or other analytics to factor in? In choosing DTEs on BBBY, I mean, I'm choosing them based off of near-term squeeze potential versus longer-term valuation potential. So the calls I'm buying for August are for near-term squeeze potential, and then the leaps I'm buying are for longer-term value potential. As far as selling CSPs on GME and CCs to lower your cost basis, I don't know what you mean by is it personal preference. Of course, you have to do analysis. Otherwise, there is risk. It's not significant, but there is risk. Everyone is so bullish on the future. Yeah, mosaic is fertilizer, phosphate. Seems like crash risk is diminishing significantly. I agree. Well, we saw all the liquidity get pulled off the table, right? Over the last few weeks with the war and uncertainty with the Fed. And it's still there. Like all that capital that they fucking printed is still floating around, right? And so, you know, now we're seeing it come back, and that's bullish. If GME's NFC marketplace has a successful launch in Q2, do you think the market will start to value GME more as a tech e-commerce valuation, or will have to wait for Q3 financials? I think some will. I think there'll be speculative interest in it, which will drive the price up and drive GME's valuation up. But yeah, I think showing earnings from that will obviously obviously improve sentiment towards it. Still not an e-commerce company. What we're looking for is we're looking for like our baseline sales to remain static, and then we want our e-commerce sales to exceed them. And when that crossover happens, that's when GameStop can start to be valued as an e-commerce company and not a retail company. Um, and ideally, we want that crossover to happen without retail sales falling off, right? So we don't want e-commerce to go up and retail to go down. That's not good, right? We want retail to remain, right? So they're successful in this arena and then more successful in this arena, not sacrificing one for the other as this rate would imply. Also, GameStop got a lot of their growth investment priced in pre-inflation, which is bullish as fuck, right? That'll be good for us long term. What are your thoughts on Docu for this coming week? 110 possible? I think so. Docu's looking very good. If you guys haven't been following this, we started playing it based on this indicator I'm kind of trying to build. Yeah, after this break of 95, 96, the next resistance level is a little bit here at 107, but better here at almost 120. So I bought June's. I'm gonna continue to hold them. Just see where it goes. I'm already up $20 a contract, so I see no reason to not just see how these tests play out. Yeah, I have a 10% stop set, and then I'll just see how it performs. If you borrow a margin, is it necessary to have the same amount of cash capital? Oh, it depends on your amount of leverage granted by margin. Margin could be like 10 to 1, 5 to 1, 3 to 1. Depends on your brokerage. Depends on your relationship with that brokerage. So, you can, in some brokerages, you can have 10,000 cash on hand and margin $100,000. Not very many will do this for you. Maybe if you have like $1 million cash, they'll let you margin $10 million. But you could all, yeah, that would be like 10 to 1. Ow. But some brokers are like 3 to 1. I think TDA is TDA 5 to 1. They tend to be a little more generous. Fidelity is pretty low, says Vanguard. IBKR and TDA I think are like 5 to 1, and then there's a few brokerages like Tasty Trades and stuff that'll do like 10 to 1 leverage. But you have to have a decent amount of money in there for them to do that. And then don't forget you have a rate that you have to pay to carry that margin. I took most oil profits when oil was around 120. Same. But yeah, I also have positions that I'm holding for the summer. Is the Fed and plunge protection just pumping the market, or should blunts lay off the mind-altering substances? He's just like not the brightest light. I'm sorry. He's not that well educated on market mechanics. Plunge protection team is not fucking like inflating the market. Do GameStop sales that are satisfied by DoorDash from local stores count as retail or e-commerce? Probably retail. The sale from DoorDash is ultimately being transacted at the retail establishment, right? Which Nevada center opening in April? NFT marketplace after open 1 to 2 months and shareholders meeting. Yeah, it's lining up. It doesn't look bad. I'm not concerned. I went over Ford KMAC earlier. If you rewind a bit, I covered Ford when you asked before. Can you look at CAT? We closed above 220 last 2 trading days. Seems significant for a start of a test of 225 or 230 in the next couple of weeks. Yeah, CAT looks great actually. It's still pushing up. It's significant. It's held significantly above its. There's another resistance line here that I keep having to redraw because I delete it. I don't know why this is on the 1 hour either, but yeah, I think CAT looks great for a test of 226. I don't know if it'll hold that test, but I'm definitely putting a stop loss when we reach it. I got out here, I believe, and then bought back in a little bit here at 220. So my 220 is just in the money as of Friday. So, but my position that I carried from down here and here, I sold out here. And then I bought back in the next day, and then I'm carrying this position right now. Is Reg Show T plus 13 trading days? It's 13 trading days, yeah. 5, it's actually 5 plus 13, right? Because it's 5 days to get on. And then once it's included, it's 13 trading days until threshold process begins. Thoughts on RC's long-term ambitions: to be one of the richest people in the country, to piecemeal build e-commerce competitors to Amazon in various niche categories. both, maybe. I don't know how much of a goal money is for him. Like I don't know if that's what's driving him, because if it was, there are things he could do that would be far more profitable for him, right? Um, so it's more likely that he's trying to compete with Amazon on some level. But also, I mean, there's no denying now that he's kind of targeting these short baskets, right? These consumer sector shorts. And I don't know why yet, but it's almost like a vendetta. It's very odd, right? Because from a business perspective, there was a million companies he could buy that were good value besides BBBY. So buying into BBBY is very, very targeted. Also, where he bought in, I mean, he bought in literally on the weakest points of the FTD cycle, and he bought in the periods when he would defeat the CNS process with his buy volume and create compounding failures. It was very targeted. It wasn't like his buy into GameStop last year, which means he's learned from that, and and even if his strategy is just to buy into these companies, squeeze them, release shares at the top, and then now you own a chunk of a debt-free company for a minimal investment, 150 million, and then he could exercise out his contracts and buy 0.2% more, and he's in a very good place to find himself in the leadership of that company. It's smart. Selling CSPs deep in the money on high volatility stocks, but also buying a protective put to prevent loss to the downside. Selling CSPs deep in the money on high volatility stocks, but also, I mean, you could get exercised, right? Like immediately. If you're selling in the money CSPs, what's to stop them from exercising? Can the pores in chat also bid ask spread? I think is something you're not factoring there. Can the pores in chat use margin through YouTube to become pigeon whales? No. Yeah, no problem, Bat Bones. Says there BB by sneeze, it's more likely to be early April. Yeah. If one occurs, it's likely to be towards the beginning of April. But that's expected, right? The GameStop sneeze didn't happen within the cyclical movement. It happened through the FTD movement. Because remember, we have multiple cycles, right, on GameStop, and the GameStop January squeeze happened during the FTD cycle. It did not happen during the OPEC cycle or the futures cycle. While it may have been caused by these, it happened here. And this was a lot of the importance of the research I did over the last year, right? Was identifying and breaking apart these three primary drivers of price action. What API do you use for a scanner? If I use scanners, which is fairly rare, you can use Polygon. Polygon's pretty good. It's expensive. Um, you can use like FinViz if you're just you're just trading, so probably FinViz is sufficient. It's got a lot of data. It's usually decent. It's kind of old, but it's effective. Guybrush from MOASS. Yes. A bit late to join. Did we already chat? Yep, all about it. Covered it earlier. I'm not sure about Vendetta. Maybe just tired of this garbage and decided to do something about it. This is not a niche mindset. People who build things don't like to be hammered by scumbags. True. It may not be a vendetta specifically, but it's very targeted. It's not just generally trying to like get shorts off his stocks, right? It's more than that. Checking out Docu, how low does OI need to be before it gets concerning? Most strikes only have a few hundred contracts, and I usually shy away from illiquidity on the chain. It'll build as long as the price continues up. Is OI really that low? Hold on. Let me look at Gamma Max for Docu. Maybe have it here somewhere, I think. I mean, Gamma Max is around 126, and the interest coming into the stock may not all be options based, right? Not every stock is GameStop. Like Docu has liquidity, it has institutional investors that are more than happy to buy it at these cheap prices. So the options chain, not the primary driver of every stock's price action. It just happens to be the primary driver of GameStop's because of the illiquidity it presents, right? You over Nvidia, Apple, or HD? I mean, they're all just going to go up with the market. I don't know what people are looking for here. If the market climbs, Nvidia will rise. Same with HD and Apple. Apple, the primary driver of S&P performance. So, if bullishness is returning to the market, all three of those stocks are going to go up. Do you want to know how much they're going to go up? I mean, Nvidia has already broken out. Its next resistance is at 265, 270, 270, 82. After that, 285. HD, not looking as good, but it's at resistance at 340 right now. Actually, a previous run that we played on HD, it's within the exact same range. The next step up is 350. A little less confident in that unless something's dramatically changed on their earnings front, which doesn't happen for a little while. Their current earnings just beat barely. Kind of a surprise, beating out by 3 cents per share. I would say 350 at most on this run, probably. It needs some other factors to push it back up into this range. This was after like spectacular earnings, and there was a lot of like infrastructure stuff, and they thought new housing was going to be built. And then what was the last one? Apple. I still have calls on this actually for the near term. Apple looks good, but it still hasn't broken its downtrend. 167, 170 is the range that you'd be looking for the next resistance if this continues to break up. But it's at resistance now. Do you generally use stop loss or stop limit orders more often? Like for example on cat. I have stop losses on cat, but that's because it gaps a lot. I use stop limits. Like I would say 80% of the time I use stop limits and then just move them manually. Thoughts on BBBY CSPs, the strike at 14? Seems like either free money or a bargain buy if assigned. I mean, I highly doubt you'll ever get filled, at least not in the near term. Your odds of getting filled are super, super slim. And you're just tying up $1,400 at a time for almost no fucking return on capital invested. So I mean, I don't see anything wrong with like $20. You can average $20 down with covered calls, and you have a much better chance of actually buying the shares you want. If the stock runs, then you've just tied up $1,400 a contract down at $14, and fucking all your capital's being eaten up shitty options that are worth nothing. Sure, it's free money, but its opportunity cost is high. And it's not very much free money. It's kind of shit. I know we're heading up, but after the fail of OPEX, this is probably the first time we have no idea what's going to happen since January 2021. Kind of disconcerting for options plays. I mean, I have just buy them further out, right? The less confidence you have in the near term, the more time you give yourself. That's why I moved after March 10th. I moved all my Aprils to June. If nothing plays out this week, I'm moving my Junes into leaps, right? That's the safest way to handle that. I think we have some idea of the thing, like what's at play. I think we just don't know what effect it will have because we haven't run into this situation before. So while we know there are factors that can improve price, we don't know how much. That's really the area of uncertainty. Not so much like we know when things are due. So that's nice. I was thinking of CSPs at 19 on BBY. Okay with getting assigned. See price heading up. Sure. What if it just continues up? This is the problem with selling. There's a problem with selling CSPs. Is you're tying up capital, and if the stock is heading up and it keeps going up, that capital is still tied up. So, you know, you'll be able to buy them back, but, you know, then you're buying back into the stock at a higher price. So it's like you're not really getting any gain off of it. We're getting decent fills, being rug pulled before I couldn't get out because no bids. Fair. Our quarterlies not very good for Daki right now. April 14th has plenty of OI. As does June, I believe, right? Yeah, June's got decent OI. I mean, this isn't that low. There's always a market maker, probably. If you have an in the money contract, like there's always a buyer. If you get rug pulled and you're out of the money, yeah, you're gonna have a hard time finding one. But I mean, June's look good. April's look very liquid. May, mediocre. But April 14th look solid. I mean, most near the money and even slightly out of the money contracts are like 700 to like 1,000 OI average. I wouldn't call April as liquid. June's might be, but they're also supported by anybody who wants, an in the money contract is going to be worth money no matter what, because there's always a buyer. But yeah, if you're out of the money and the stock gets rug pulled, so if you're just relying on extrinsic value and your strike's like up here and the stock gets rug pulled, you won't find a buyer. That's where you run into liquidity issues. If you're in the money, you shouldn't have a problem finding a buyer if there's a rug pull. Yeah, you can buy them back at the lower price, but you have to wait for your funds to settle. There's issues there, right? Like if the price is continuing to climb up and you're tying up all your capital down here, like BBBY is, broken out of that $20 trend and is now trading up at like what, 22. Yeah, and as it runs more trash, like if it breaks 100, it's gonna pick up a lot more options interest. This is why you want to be in early though, because then your gains have surpassed. This is like why you don't want to chase shit, is because if there is a rug pull situation, which is very common on things that are being chased, you were in early enough that you're very deep in the money by the time a rug pull could occur. I was thinking of CSPs at 19 on BBBY. Okay with getting assigned. See the price heading up. I mean, the fact of the matter is that you're probably not going to get assigned at 19 on BBBY. 20 is solid. So if anything, the best way to do that would be to sell in the money at a price that you're willing to buy at. And then if the price continues up past there, at least you've harvested some of that intrinsic premium, right? Like this week, because I expect BBBY to continue to climb, especially with all these ETFs getting rebalanced. Like tomorrow, I intend to sell BBBY CSPs in the money. And then, you know, if the price continues up, at least I've captured some of that value. What's on LRCX? What the fuck is that? Looks like it's just moving up with tech, kind of like everything else. So if you have some calls that are now in the money, you probably have a chance for them to continue to go up. This is all going to depend on market stability, right? Like all of these bounces are going to depend on the stability in the market. If it continues to allow for more speculation, then the prices will go up. From experience, lots of old school Silicon Valley wants to make new things and change the world. RC strikes me as this mindset. It's possible. All good trash. Even BBY 20 CSPs are not filling this past week. Yeah, I mean, that's where I was selling. I was selling them at 2018, 16, but like this week, I'm going to start selling them in the money, right? Because it's like going up. Thanks for answering questions. Just FYI, I think you accidentally labeled both of the last two Dillionaire Hot Tub stream as number 40. I don't think so. Today should be 41, right? It's 41. That was like last week's, was it 40? Maybe. I might have missed that. If I did, I'll go back and fix it. So this is 42. Is there anything bullish about that? Full credit spreads within the money short puts. Yeah, you could do that. You don't get assigned immediately for selling an in the money CSP, do you? Not very often, no. So like if I'm selling CSPs on a stock that I expect to go from like 20 to 25 over a given week, right? Even if it ends up at like 23, if I sell 22s, I've captured that $2 worth of growth, right? It's much better than selling 20s and then, you know, the price climbing up. And like, even though I can buy these back, like I've still lost that additional value from the time I sold the contract. And then, you know, you can buy calls too. If you expect it to really move, you can use the credit from the CSP to buy calls, which is kind of what Dave was discussing there. Thoughts on a move up on Starbucks? Just came off its 52-week low. The last time I bought this, I got kind of burnt, but it's got a little range, but not much. Like 50 cents, and even that's questionable. Also, its breakout doesn't seem as strong as a lot of other stocks that are regaining value right now. This almost looks like consolidation. Look at the struggling with this $90 range. If it does, there's some nice room. I mean, like 92. I don't want to say 100, but maybe like 95. I just don't like the range on this. I feel like so many other companies have so much more range. Like, why why here, right? Like Docu, for instance, has like $30 of range. If you're playing options, you care about the range and price, not percent, not necessarily percent gains, right? So, you know, yeah, like this just doesn't have that much room. You're playing like a $5 move. It's just not, it's not great. $42 is the meaning of everything. Yeah, that's true. A Tesla CSP guy still makes me laugh. Which one? Squamps, thanks for becoming a Cornishon, dude. I appreciate it.
Welcome to Cornishon.
So I'll have the Pickles picks up in Dillionaires a little later today. Was there anything else I was forgetting that I wanted to cover on this stream? I don't think so. So I think everyone's got a pretty good idea of what we're expecting for next week, which is some potentially violent upside or PVU. We'll see how it plays out, though. We don't know yet because this isn't a situation we've run into before. It could very well be that next week is just a traditional OPEX week. It may not be, though, and so that's why I'm still a little hesitant to buy into like a really bullish like short-term options position because we just don't know, and it's unfortunate because like there could be gains left on the table that we'll have to wait till the following quarter to capture next time, which, you know, obviously presents its own set of risks, but I don't see a better way of approaching it. So you got to sign on like 600K worth of Tesla almost instantly on fairly deep out of the money CSPs? What the fuck? That's weird. Potential VUP. Yeah, PVUP. So, you know, I think if we start to see a move Monday of any significance, 10 to 15%, that might be a good indicator for, you know, some serious upside on Tuesday. But let's see what happens, right? I already have options in place. Some of my strikes going into the money on Friday already. I don't have a lot of range. I don't have a lot of out of the money. So if I see a move of like 10% tomorrow and some serious volume, I'll probably buy maybe like some 150s. But I'll still keep my date far enough out that I can retain some of that value. And I think that's about everything for today. Thank you guys for tuning in. As always, I appreciate all your support so much. Thanks for hanging out. And I'll see you bright and early tomorrow morning, 9 a.m. Have a good night, guys.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not...
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Sit, Krian, sit. Good dog.
Did you get any of that?
It's a good show.